Welcome to London Property News Bulletin. Every week, we break down the key headlines and the wider news that could influence the market, keeping you informed and confident in your decisions. Here is what you need to know this week.
Because of the recent Middle East tensions, some expats living in Dubai are temporarily relocating. London is an obvious fallback. It's politically stable, familiar, and many wealthy expats already own property or have children in UK schools. That means sudden demand for furnished short-term rentals, particularly in prime central London. Agents are therefore seeing inquiries for 6 to 12-month lets in areas like Kensington, Chelsea, Notting Hill and Holland Park, with budgets around £3,000 plus per week. That part makes sense. This is exactly the segment of the market that can react quickly to geopolitical shocks. However, it's unlikely that Dubai expats alone are driving rental inflation. Prime London rentals were already undersupplied due to several factors. Landlords selling because of tax and regulation, the upcoming Renters' Rights Act, May 2026, fewer new rental listings in prime areas, and ongoing international demand for flexible high-end lets. So what's happening is probably this. A sudden wave of wealthy short-term tenants has landed in an already tight market, which pushes rents up quickly at the top end. In simple terms, London's reputation as a safe harbour city means whenever global instability appears, demand for prime London homes rises almost immediately. Savills has agreed to buy US real estate investment bank Eastdil Secured for $1.1 billion, including debt, as it looks to strengthen its presence in North America and expand its capital markets business. Eastdil specializes in real estate, M&A, debt placement, and structured finance, with around 76% of its revenue coming from North America. Under the deal, 85 senior Eastdil employees will own about 6.3% of the enlarged Savills Group. Savills expects the acquisition to boost earnings per share by the low to mid-teens by 2027 and generate around £60 million in annual revenue synergies over time. The announcement follows strong 2025 results for Savills, with revenues up 6% and underlying profits rising 11.4%. However, despite the positive outlook, Savills shares fell nearly 5%, as investors reacted to growing geopolitical tensions in the Middle East, which could affect the global economic outlook. Savills has around 800 employees in the region, which accounts for roughly 5% of its profits. Rightmove's latest data shows that London still dominates Britain's ultra-prime property market. Out of the 20 most expensive streets in the country, 19 are in London, confirming the capital's continued appeal to high-net-worth buyers. The most expensive street is Winnington Road in Hampstead, where the average asking price is around £12.5 million, retaining the top spot for the second year in a row. In second place is Chester Square in Belgravia, with average prices of about £11.5 million, followed by the Bishop's Avenue, also in North London, with average asking prices close to £8.9 million. The only street outside London to make the top 20 is East Road in Elmbridge, Surrey, with an average asking price of roughly £8.8 million. Across the rest of the UK, the most expensive streets are far lower in price. Drumshoe Gardens in Edinburgh, Hollybush Road in Cardiff, and Congleton Road in Alderley Edge lead their regions. Overall, the data highlights that London continues to reign supreme when it comes to Britain's most prestigious and valuable residential addresses. Angela Rayner has urged the government to move faster on its proposed changes to leasehold laws, warning that delays risk undermining public confidence in Parliament. Speaking to the Commons Housing Committee, said ministers should get on and do it and push ahead with their election pledge to cap ground rents and tackle what Rayner claims are abuses in the leasehold system. She also argued the government should go further and harder in regulating managing agents, describing the current lack of oversight as a serious problem. The government's draft leasehold reform bill is currently being reviewed by MPs. It proposes capping ground rents at £250 per year, banning the sale of new leasehold flats, and giving homeowners greater control over building management. However, the bill does not include regulation of managing agents or measures to restrict service charges, issues Rayner says must still be addressed. Her intervention highlights growing pressure on the government from the socialist left to deliver changes quickly and to ensure that opposition does not slow down changes that Rayner claims many leaseholders have been waiting for. The UK housing market is becoming more volatile as geopolitical tensions, including the conflict involving Iran, push up inflation and mortgage rates. According to the Royal Institution of Chartered Surveyors, buyer confidence weakened in February. New buyer inquiries and agreed sales both fell, showing a clear slowdown in market activity. House prices were largely flat overall, but there are strong regional differences. London, the South East and East Anglia are all seeing downward price pressure, while markets in Scotland, Northern Ireland and the North West remain more resilient. Mortgage markets have also become unsettled. Some lenders have withdrawn mortgage deals and average rates have climbed above 5%, as rising oil prices and inflation fears linked to Middle East tensions push borrowing costs higher. Despite the short-term uncertainty, surveyors remain cautiously optimistic over the next year, with many expecting sales and prices to gradually recover if inflation pressures ease. At the same time, the rental market continues to tighten, with landlord supply falling and rents expected to rise in the coming months.
That wraps this week's London Property News Bulletin. Thank you for listening. If something caught your attention or you need support navigating the impact of the news, then please reach out to us. We're here to guide you. If this was useful, do pass it on to someone who also follows the market, and don't forget to subscribe to stay one step ahead.